And it's 10 a.m. here in Lagos. Good morning and welcome to Business Morning. I'm Ladi Williams.
Good morning. I'm Ini John Mekwayo. Welcome to the show. Well, it's decision day for the Monetary Policy Meeting Committee. It will be the fourth for the year 2021. The last meeting, which was in May, the committee had to choose between addressing the high inflationary pressure or pursuing measures to support the economic recovery. At the end of the meeting, members unanimously voted to leave its policy rate at 11.50 and other parameters unchanged. After that meeting, the MPS has released inflation figures tapering. The last one depreciated slightly from 17.93% in May to 17.75% in June. Questions that economists have been chewing on are, is this trend of slowing inflation consistent? What factors are driving the depreciation? Should MPC now focus on economic recovery? Well, a lot of analysts have predicted a whole decision by the MPC as to allow slowly recovery economy to continue in the trend. But in a couple of hours, we will know that decision, and Channels TV will be bringing it to you live during the special edition of Business Incorporated at 1:30 p.m. Until then, we will also touch a bit on it on Business Morning.
You don't want to miss that. Well, President Muhammadu Buhari has signed the 982.7 billion naira 2021 supplementary appropriation bill into law. The budget is to address urgent security and COVID-19 needs of the nation. Of the amount, 123.3 million is slated for recurrent non-debt expenditure, while the sum of 859.3 billion is for contribution to the Development Fund for capital expenditure for the year ending December 31st, 2021.
And oil prices were steady today, with investors betting tight supply and rising vaccination rates will help offset any impact on demand due to surging COVID-19 cases worldwide. Brent crude futures climbed 13 cents to $74.63 a barrel, extending a 0.5% gain of yesterday. U.S. West Texas Intermediate crude futures rose 4 cents to $71.95 a barrel after losing 16 cents yesterday. Benchmark prices rose even after the United States issued travel warnings to Spain and Portugal due to rising COVID-19 cases. And a White House official said that wider travel curbs will not be lifted due to highly infectious Delta variant. And, well, we'll see how that goes. Global markets are expected to remain in deficit despite a decision by OPEC Plus to raise production.
Meanwhile, the worst is over for the global crude oil market, and that's according to the Secretary General of the Organization of Petroleum Exporting Countries, Mr. Mohammed Bakindo. He made a declaration after meeting with President Muhammadu Buhari at the State House in Abuja. Speaking on efforts made by OPEC to bounce back from the impact of the COVID-19 pandemic on the global price of crude oil, Mr. Bakindo mentioned that the cartel is on the path to recovery. Do take a listen.
We have gone through the worst year in the history of OPEC. In the 6th-year history of this organization, we had not witnessed such an oil cycle that we witnessed last year. Therefore, it's incumbent on me to come at this time to brief him on all the efforts that we have made, what we have achieved so far, and our projections going forward. And I will repeat what I had said severally, and that the worst is over for the oil market. We are now on the path of recovery, and thank God you can see the effects in all the benchmarks around the world.
You're welcome back. Well, for the first half of 2021, total investments announcements stood at $10.11 billion compared to $5.06 billion same time last year. The impact of COVID-19 largely fell there. Well, also the foreign portfolio investments in Nigeria recorded a 77.4 year-on-year decline in the first quarter of 2021 to stand at $974.1 million. The main gauge of external sector confidence, which is the foreign portfolio investors, has plummeted 41.57% in the first 4 months of this year. Figures on domestic and foreign portfolio Participation in Equity Trading for April 2021, published by the Nigerian Exchange Limited, show that foreign investors have reduced their stakes to 178.25 billion naira at the end of April. This is against 305.05 billion naira invested in corresponding period in 2020. Well, to help us understand both the domestic, the foreign, and all these figures, we have the Executive Secretary and Chief Executive Officer of Nigerian Investment Promotion Commission, Ms. Yewande Sadiku, joining us this morning. Good morning, Ms. Sadiku.
Good morning, Ini. Thank you for having me.
Well, good to have you, especially as your birthday is today and you decided to share it with us. We'd like to say happy birthday to you.
Happy birthday.
Nigeria celebrates with you.
You were not supposed to know that. You were not supposed to know that.
It's supposed to be a secret. Well, happy birthday, Ms. Sadiku, and thank you so much for sharing your birthday with us.
Thank you.
All right, so we heard about the domestic and the foreign portfolio investment. What's your overall view on both the domestic and the foreign? We saw the foreign going down, domestic picking up in some areas. What's your view, looking at both sides?
Foreign and portfolio investments will rise and fall, differently throughout the quarter, throughout the year. I think it's when you take a back look and you look at the overall trend over a period that you can properly see a picture of what's going on. But if I compare 2021 with 2020, clearly because of COVID, 2020 was a depressed year in terms of investment flows. That was expected. It was not expected only for Nigeria, it was expected globally. 2021, we expect recovery. The recovery has been somewhat slow, but that's also expected. But as we all get comfortable with working with the reality of COVID-19, investment flows should pick up. It is expected, though, that there's a possibility, there are two possibilities. One is that countries like ours, with our large population, underserved markets and the like, can truly benefit from investment flows.
This is a live Channels television event.
And exploitation of their competitive advantages. But there's also the possibility that people focus on the markets that are easiest for them to do business because they don't want to take the risk.
All right, so the report refers to announcements, and we know that the gaps between announcements and actual investment demonstrate investment potential. How much gap is in this first half investment announcement?
So we haven't seen the actual investment numbers for the first half. The actual investment numbers and the investment announcement numbers, there's normally a lag. It'll probably be at the end of the third quarter, for instance, that we'll see the flows for the first half of the year. But historically, there has been a gap between investment announcements and actual investments. This is not surprising. Investment announcements are made in advance, and investment announcements take a while to play out. Investment announcements that we make are also tied largely to the activities of direct investors, which take a while to birth from when they indicate their intentions to when they, actually implement. And, that time lag can be affected by a variety of things. It's slightly different from portfolio investors who have the capacity to move quickly in reaction to market opportunities. Even if direct investors wanted to take advantage of market opportunities or government policies that are favorable today, it will take a while for their actual investments to kick in. So the lag is not unusual.
All right. So we're looking at this H1 2021 investment by source now. Nigeria, that's domestic investments, overtook the United States to lead the list, accounting for 33% of investment, while the United States went from 42% to not even making the top 5 sources of investments at all. Should we be worried about this?
I will not draw too much of a conclusion from that. The nationality, if you like, of the investment announcements change from quarter to quarter. They change from year to year. And they're very tied to the specific kind of projects that are going on. So I wouldn't worry about, a 1 quarter trend or a 1 year trend. It's when you look at it over a period. If you look at it over a 3-year period, we've only been doing this for about 3.5 years now. So we don't even have a long enough data set to comment on the trends. But I would not be worried about the changes from 1 quarter to the other. It's very, very tied to the kind of projects that were announced during the quarter.
All right, looking at the sectors, manufacturing overtook transportation and storage at 58%. Does this credit go to the effort of the federal government or for ease of doing business?
And again, I think it may be too early to tell. Remember, these are announcements. They are not actual investments yet. And because they're very project specific, it's a function of the projects that were announced in that particular quarter. And the total figure that you mentioned of 10.11 billion relates to the first half of the year, where we saw a stronger first quarter than second quarter. Again, that trend is not unusual based on the data that we've been gathering over the last 3.5 years.
Okay, so information technology was a major contributor to pulling the economy out of recession last year, especially with COVID. A lot of people went virtual. But now we saw that it went down from 32% to 4%. Well, we're happy manufacturing is leading, but having ICT at this time going down to 4%, that calls for concern, isn't it?
Again, it's not an unusual trend. A lot of the deals in the sector, 1, are private, 2, the amounts may not be announced. So even when a transaction is announced, it's not all the time that the value, of the deals are announced. If the values are not announced, even if we are aware of the activity, we cannot include the numbers, in our tracker. So that may well account for it. But certainly we find in that ICT knowledge space that there's a lot of interest in Nigeria.
Okay, so from what you're saying, are you saying there are some investment that are not captured in this report, and should we look for a way to capture it? Or, this is the informal sector, like you mentioned, the private sector. Should there be a way to capture it, or it doesn't really matter?
No, it's an excellent comment, Ini. In reality, it would be great if we could capture all investment announcements. But the report we put out, and we're very clear on the cover of the report, we're very clear in the report that the report is based on announcements that are tracked by NIPC's newsletter, which we put out 6 days a week. It is publicly announced transactions generally, or publicly announced, interest in deals. There's no requirement in Nigerian law for investors to advise anybody of the investments that they want to make. So it'll always be difficult to capture 100% of the universe of what is coming into the country. So this report serves as a proxy. It gives us a directional sense. We know it doesn't capture all, but it gives us a sense enough for us to, be able to advise senior government officials and give direction to government.
Okay, well, I think we're having a bit of a technical
glitch there.
Yeah, with Ms. Sadiku. I'm sure we'll get her back. But like I was asking her, to make plans, you need data. To make plans, you need data. And we're talking of data here about investments. So at least the country or the federal government can know the direction to take, the direction to channel its energy on.
Exactly.
Because for instance, when you look at ICT, you expect a whole lot more.
Yeah.
A lot of things actually came up in the ICT space between last year and this year.
A lot of startups in that space also. So you'd expect, to hear more
announcements or investments
going into the ICT sector, and also looking at states too. You can see that we still have the oil-producing states getting
yes.
all the attention, and
so that puts a lot of question mark on the efforts of the federal government to diversify the economy. If the leading states when it comes to investment announcement is still the oil-producing states, Akwa Ibom, Rivers State, Bayelsa, and then you have Lagos finding its way just somewhere down there.
It's not a good sign, and we need to start looking into serious diversification of the economy so that we can see,
it's not just about diversification, but it's also about making the economy very inclusive. I mean, like she said, the data is based actually on a newsletter by the NIPC, but how involved are, the private sector? How involved are Nigerians, in this? Because if we don't get the data, we might just be working, taking wrong decisions.
And also getting rid of policies that actually discourage, foreign investors. That's another.
Yes, because, foreign investors will look at the data to make decisions.
They would look at,
I think we have Ms. Sadiku back. Hello, ma'am. Are you back? Ms. Sadiku, are you back?
Thank you. My apologies. I didn't know. My device just went off.
Oh, yes. That happens.
Well, it's okay. So I don't know if you can pick up where your thoughts where you were.
Yes, please. If you just ask the question again.
Okay. So you were actually talking about the data. We're asking the ICT space, we're expected to see more, especially at this time, because even just around us, we see a lot of inventions and innovations have come up because of COVID, space, and yet we did not capture that. And you were saying that the NIPC actually depends on data from its newsletter. So we're just, when you went off, we're asking or discussing to see, is there no way of expanding the capture of the data? Because the right data leads us to take the right decisions, and it will help the economy at the end of the day.
You're right. The more data we have, the better informed the decisions that we make are, so that they're not based on anecdotes, they're based on actual facts. But gathering data that you have not been gathering before, will take some time. This report of investment announcement is something we put out now for the last 3.5 years. As I mentioned, there is nothing, I don't know whether you heard this before I was disconnected. There's no requirement in Nigerian law for investors to tell anybody what investments they are making. So it will always be difficult to capture 100% of what actually comes in, but a directional sense of what investors are doing, of what sectors they're looking at, of what parts of Nigeria, of what sectors, and states and the like they're looking at is useful. It is useful because it provides us with some directional guidance about the things that we need to be conscious of. But we certainly recognize that it is not 100%. I also think that it may not be, it may be difficult to then legislate or require investors to tell us 100% of what they're doing, because it's important as markets develop that we minimize the friction that investors experience in coming to Nigeria. Ideally, we should make it increasingly easier for them, not increasingly difficult for them. So we will continue to think about ways that we can capture the information that we need to make better informed decisions. But it cannot be by making the life of investors more laborious.
Okay, but before we let you go now, 7 months into the AFCFTA year, how has Nigeria maximized the window?
So trading has actually not started under the AFCFTA because the schedules that are required for that trading have not been fully adopted yet. So a lot of what many countries are doing, Nigeria inclusive, is fine-tuning and ramping up their implementation plans. And in Nigeria, there's been a fair bit of sensitization, one at the organized private sector level, so sort of sector by sector, and with the states. So there's been a fair bit of work that's going on with implementation at state level and with sector groupings. But trading under the AFCFTA has actually not started because the schedules have not been adopted. Yes.
All right. Thank you so much. We'll have to leave it there now. Yemade Siddiqui is Executive Secretary, Chief Executive Officer, NIPC. And again, happy birthday.
Thank you. Thank you very much. Have a good day.
Thank you so much. You too. All right. After the break, we'll discuss burning economic issues on our commodities market segments. That's in a moment. To stay with us. This is Business Morning.
You're welcome back. Well, the President Muhammadu Buhari, has signed a 982.7 billion naira 2021 supplementary appropriation bill into law. The budget is to address urgent security and COVID-19 needs of the nation. Obviously, these are pressing economic needs, and Nigerians will be looking forward to the impact of the supplementary budget in these areas. We have sharing his thoughts with us on this, Nosike Wajide. He's a research analyst with Financial Derivatives Company. Good morning, Nosike. Thank you so much for joining us.
Great to have you. Thank you for having me.
So we have the supplementary budgets signed into law now to take care of COVID, which is an obvious, need.
Yes.
Security.
That came up for us last year, and security.
Another major issue there.
So what should Nigerians be expecting from this supplementary budget?
Insecurity, as it stands, it's the overriding concern for not just the government, but every investor, everyone who has a business or a job, or who needs to leave his house.
Who is even living in Nigeria?
Who has children in school and all whatnot. So, if you are spending that much, the bulk of it is going to tackle insecurity. So it's going to security agencies. So it's equipment, it's imagine training of personnel, because you hear sometimes in the news that they're not trained to tackle banditry and some of the things that we face now. So I imagine that some of that funding is going towards training the personnel, bringing them up to the point where they have adequate training to face these bandits and terrorists and all whatnot. So, and equipment as well. If you tackle insecurity, the opportunity cost of not spending the money is the status quo. Let's carry on as things are. Things would probably get much worse. You have children unable to go to school. There are some routes.
In Kaduna schools
in Kaduna,
schools have been
higher
shut down
institutions as well. Yeah, there are some routes, there's some roads you can't travel by because, you know that you're going to get kidnapped. Even military personnel getting kidnapped. So you need to tackle this. You need to, there will be a boost to investor confidence. Okay, look, this will be in the next by the end of the year.
Yeah, because I wanted to ask, what should be the time lag in between? Now it's been signed into law. When should Nigerians expect to feel the impact of it?
Obviously, there will be some delays in acquiring equipment. There will be some delays in training the personnel. But hopefully, by the end of the year, we hope to see, and we hope in quotes, hope to see that, we hope to stop hearing incidents. Even if there's been some, I think there's been an announcement that the press should take it easy on the reporting
of details of bandits, banditry, kidnapping.
We hope to not hear anything at all. We hope that
not that the press is not saying it, but it's not happening.
It's being muffled. We hope that by the end of the year, businesses in those parts of the country, and especially farmers, people in agriculture and farming in those parts of the country, will be able to go about their business as they've always done. This is crucial for confidence and economic performance.
All right, we've talked about training personnel, buying equipment, but I hope we'll hear about technology too.
Obviously, technology, reconnaissance, intelligence, being able to gather information. The SIM card and NIN linkage is part of gathering.
Still in the works.
Yes, it's been extended to October now.
Yeah. Yes, because I don't know if these bandits communicate via satellite phones. I imagine they use cell phones. I imagine that monies will be somehow taken to banks. Somehow, I believe that with intelligence is primary at this form. Data, we live in the information age, and somehow being able to gather data will make your job, any task, easier, especially tackling security.
Some people have said that it's not just about the money. For instance, the other time I took us to Dubai, they traced the sponsors of some terrorists, and they're expecting Nigerian government to take the step further and pursue those information. So some people just say it's not just about the money and
what about
perhaps more of the willpower.
Yeah, money and power. But in this part of the world, in the third world, like, power means money, and money means your ability.
The willpower means money.
Power typically means money.
Political will.
Money typically means the ability to acquire power, and that vicious cycle is entrenched. Okay. So if you're talking about people funding terrorism, it all comes down to data gathering, information, know where this financing is coming from, where is it going to. Being able to track that makes your job easier.
All right, let's look at what's happening in the oil market.
No, before we go there, today is FDC.
Oh, yes.
Today is MPC
our
meeting.
MPC, yes.
Yeah, in a couple of hours. I mean, we'd also like to use this opportunity to tell our viewers that at 1:30 we're going to have a special edition of Business Incorporated, where we'll give you the live decision of the MPC, the fourth for the year.
Yep.
But so what is FDC predicting from the meeting?
What's the forecast now?
I think in line with the market expectations, we expect that the MPC will maintain status quo on all its policy parameters and continue to use its orthodox tools to maintain orthodox liquidity management tools. We just continue what it's been doing for the past 2-3 quarters now. Basically, we've seen inflation fall, trend lower. Now that went against anecdotal evidence, because most people felt that prices were rising.
Yes,
but
prices are rising.
Are rising.
They were not. They are rising.
Prices are obviously...
Gas is up now.
We were talking about fish this morning. I remember a kilo
fish,
of fish.
Gas, everything is up. So if they were not, they are rising.
Prices are rising, but,
exactly.
But at a continually slower pace. Slower pace. Prices are rising, but decelerating at the same time.
But there's rise.
Yeah, but the expectation is that as we enter the harvest season in Q3, well, this is July, by August, September, you have the harvest season, prices will fall further. Okay. So that would taper prices. So the MPC has that at the back of its mind. Also, economic growth at the moment has become a primary concern, basically. Ordinarily, price stability, tracking inflation and trying to keep inflation low. And obviously, because Nigeria is hugely dependent on imports, the currency. Those are typically what the CBN monitors. Right now, given where we're coming from COVID and the need to bolster growth, economic growth, it's a primary concern. The last Q1 growth came in at 0.5. It's positive, but it's fragile. And the Q2 growth numbers don't come out till August 26th or thereabouts. And obviously, we have the meeting today. The next MPC meeting is not until after that date. So whatever those numbers will feed into the decisions at the next MPC meeting. But for now, we think the MPC will maintain status quo and just watch to see, hopefully the growth picks up and inflation tapers. We feel that, given that
it's growing at a slower pace.
Yes, at the time that we all thought that the inflation figures would soar, they slowed down. But now that at this time of the year, they typically slow down. So we expect it to fall further down. That's what's...
Anyway, the World Bank has noted that Nigeria is going through its worst unemployment crisis in the moment. Over 20 million people left the Nigerian labor force, and that's a big number. How's that going to affect, production, commodities market, and the economy? In the last 10 years, the report says in the last 10 years, unemployment has gone from 6.4% to the dramatically high 33.3% that we had reported last year. The major problem, obviously, that we have a huge population. We have there's a lack of opportunity, basically. Unemployment there's an output problem. The output problem has to do with your inability to produce and hire people. So this is a problem that, to some people, having that huge amount of people leave your workforce, obviously they are migrating, they are economic migrants to other parts of the world. Nigeria has this huge remittances, averaging about $25 billion that are coming every year. It's Nigeria's second largest source of foreign exchange. You have Nigerians, both qualified and unqualified, doing all sorts of jobs overseas, and they remit a huge amount of foreign exchange back home. This foreign exchange goes to supplement feeding, jobs, investment, and all whatnot. The fact that things have gotten worse in terms of Nigeria's population soaring, and our ability and the inability of growth to capture these people that join the workforce over time means that you will have a lot of qualified people unemployed. The option is will you remain unemployed? And high unemployment typically leads to crime. Right.
Would you get unemployment, or do you look for pastures greener overseas or pastures at all?
And at the same time, we know we
overseas?
have a lot of entrepreneurs now. You
Yes.
know, you go on Instagram,
So we have a lot
you
of
see a lot of
creation of jobs.
Yeah, so people
Yes,
are
but all
creating
that being
their
said,
own
it is barely enough. It's barely enough to scratch the surface of the unemployment problem. The fact that we have a lot of entrepreneurs means that the unemployment figures would have been worse
if not.
if we didn't have
But you know what's bothers me more about that report is the increase in asylum seekers and refugee status. Is that normal? Is it just people looking for a way of escape?
Yes.
Or is there something actually? And because if it's unemployment, yes, we know we have a large population, we don't have enough jobs. But when you hear of asylum seekers and refugee status,
ordinarily, economic migrants will need to meet certain requirements or standards before you could migrate to wherever. When you are unable to meet the standards, you look for what's the next option. I can seek asylum. I could seek refugee status. I just need to leave to somewhere where I feel that things will be better for me. So we've seen this increase dramatically as unemployment has soared.
Right.
So it's cause and effect, really. It's not
because
it's not
even with birds, you know, you see birds migrate from one area to another when there's maybe drought.
Yes, it's seasonal.
So it's a seasonal thing, right?
But this isn't seasonal. This is just things are getting worse.
Right.
There's a lack of economic opportunity, and there's a surge in Nigeria's population. People are looking for moving to greener climes. That's what it is.
All right. Let's look at price movement in the commodities market. What's going on there?
In the past month, basically, rice and cement prices have been the only stable prices. Every other price in the market is still up. Like we talked about a couple of minutes ago, prices are on the rise. There's higher logistics costs because of insecurity from the sources of the food belt area of the nation to down south. There's currency pressures leading to higher price of imported food. And obviously, there's seasonality. Yeah. At this point in time, we expect that prices will taper in the coming months. But for now, little scarcity leading to higher prices. So that's what we expect. But in the coming months, we expect prices to taper. If we have relatively higher oil prices, Nigeria's oil output is set to increase. OPEC has reached a deal giving Nigeria's going to go back to 1.8. Yes. So that's a huge boost to Nigeria's forex inflow. So we expect some currency stability in the coming months. So that would lower the cost of, obviously, have some reserves accretion, naira stability, lower cost of
And then we have
imports.
the harvest season coming up. And expect that will all combine to give Nigerians a sucker because, honestly, the prices are really
fresh air.
the prices are really up, and it's very discouraging to a lot of people. Well, thank you so much, Nasike, for sharing your thoughts with us.
Always great to have you.
Having an interesting conversation this morning with us.
Well,
we'll just move over to the market segment now. The Nigerian equities market started the week trading on a positive note. It was a good one yesterday. Most of the sectors were up. Oil and gas was the star of the day. But Will has the details. Hello, Will.
Good morning, Ini. Like you rightly said, the equities market opened the new trading week in the green with a record gain of about 94 billion naira. Apparently, the half-year earnings season is gaining traction as investors continue their bargain hunting in value stocks. Investors are showing interest, particularly in the stocks of Oando and Total, making it to rally most on the NGX. Oando's share price rose by about 9.82% in yesterday's trading session, and the stock has seen an uptrend since it ended its corporate legal dispute with the SEC. The benchmark index rose yesterday, climbed by about 0.47%, and same with the market capitalization to close at 38,849.08 points. And the market cap was at 20.240 trillion naira. The total volume of trades yesterday was increased by about 7.1% to 246.55 million units. However, value of stocks traded went down by 3.1% to 2.24 billion naira on all exchange in 4,676 deals. Fidelity Bank was the most traded stock by volume at 30.54 million units. That's a great one. While GTCO was the most traded stock by value at 378.32 million naira. Performance across the sectors was broadly positive as key indexes posted gains. But let's bring in Mike Eze now to give us a broader perspective on the markets and what went on yesterday. Good morning, Mike.
Good morning. How are you?
Great, I'm fine. How are you?
I'm okay, thank God.
Okay, great. Mike, the stock market has rallied by 2.49% in the month of July. Also, last week, the market saw an increased buy-side activity and overall improvement in activity level, which was largely driven by the expectation of better than expected second quarter earnings as seen in some of the early releases. Should we expect to see similar trading pattern for the rest of this week? And is there a possibility of profit taking on some counters that have seen gains in recent sessions?
Yes, there's likelihood of profit taking because, the market from hindsight after COVID, when there's a rise in prices for a short period of time, people tend to take profit, particularly institutional investors. And then, again, you have to put into consideration that this is month end and then probably the end of the quarter. So the banks will be reported, their balance sheets are likely going to be reported as to have the likelihood of the credit balance, huge credit balance. And, most of them who invest in stocks, they have to take profit and then shout their balance sheets at the end of the month and probably at the end of the quarter.
Thank you so much, Mr. Mike Eze. Mr. Mike Eze is the CEO of Crane Securities Limited. Thank you so much for coming on the show. Now, at the unlisted market, we see that securities, the securities index and the market cap closed negative in yesterday's trading session. It was down by 0.12%. And however, there was an increase in total turnover. We see that the volume traded was 5.35 million units and the value was 94.21 million naira and traded in 45 deals there. Of the three stocks that were traded yesterday, the NGX was the advancer as its share price inched up by 2.1%. The NGX currently, if we must know, holds a market capitalization of 2.54 billion naira at the OTC market. We move on to the fixed income market where the bonds market traded mixed with a bearish tilt, as we saw that some of them, which recorded some sell-offs at the short end, but at the long end of the yield curve, this was due to, the yields fell at the long end due to demand for the March 30 to 36 bonds. Meanwhile, average yield was flat at the mid segment. On the other hand, trading activities in the Treasury bills market started off on a calm note. Volume of trades witnessed across the curve. However, it closed bullish as the average yield fell by 17 basis points to 6.7%. There were buying interest in CBN special bills. As we see there was the value of trade was at 58.53 billion naira. And we saw that the yields was at 10%, volume of deals was 23, and total value, like we said, is 58.53 billion naira. At the almost segments, we see that the average yield rose by 4 basis points to 8.6%. An almost maturity of about 16.84 billion naira is slated for today, and we're hoping that we would see probably more liquidity in the system because of that. And moving on, we see that also we're hoping that the MPC today, in today's decision of the MPC, we're going to see how it's going to shape the buying and trading on the fixed income market. We probably tomorrow we'll have more insight on that after today's decision by the MPC. That's all we have for you. Great to share our thoughts today.
All right, Will, thank you so much. Well, like you said, we are all waiting and keeping our fingers crossed for the MPC decision and to see the impact it will have in different sectors and different parts of the economy. And then in the coming weeks, I'm sure we'll see that come to play. Thank you so much. Enjoy the rest of your day, Will.
Thank you so much. So
we'll take a break now. When we come back, we'll head straight to London for our opening call. Do stay with us. It's Business Morning on Channels Television. You're welcome back. We head straight to London now, where Juliana is standing by to give us developments from the UK. Hello, Juliana. Good morning.
Good morning, Ine.
Yeah, so opening up the economy has increased desire for more space. Talking about housing now, did families expand during the restriction?
Yeah, you're absolutely right. I think, this is part of a much wider story. It appears to be almost a never-ending story about UK house prices. There was some data released early this morning suggesting that house prices are up 30% than its peak in 2007. More specifically, year on year, it's up by about 5.4%. There are several reasons, but one of the reasons are the fact that people are reassessing their priorities and their needs. Lots of people moving out of London, moving into the suburbs, away from the city, and they want bigger properties. This is also within the data. If you bed down in it, you can see that the demand for homes is outstripping the demand for flats. And also as well, even though we are seeing a surge in house prices, we're not really seeing this in London. And of course, London, as some people consider it, a concrete jungle. You can't really get as much for your buck. And of course, we can't forget Rishi Sunak, the Chancellor of the Exchequer, putting in that stamp duty holiday axing. That's been reintroduced. But up until June, lots of people were taking advantage of that, saving tens of thousands of pounds. And of course, the bigger the house, the more you save. And I think that's been cited as one of the reasons.
Okay, good to know, because I was wondering. Well, First Group boss quits and they say it's victory to the shareholders. What's the story behind this?
Yeah, this is an interesting story concerning Matthew Gregory. He was the chief executive of the FTSE 250 listed firm First Group. They're based in Aberdeen in Scotland, but they operate trains and bus services out of the UK. They have a large shareholder based in the US. They're a private equity firm called Coast Capital. They had their AGM yesterday, and they basically said they wanted him out. They wanted Matthew out alongside two of his senior team. And this is down to the selling of two subsidiaries in America. Now, apparently, they were sold to a Swedish private equity group, EQ2 Infrastructure, for over $3.3 billion. It sounds like a lot of money, but according to the shareholders, this wasn't enough. It was way undersold. According to those close to the matter, these proposals were put to the board and put to Matthew Gregory and his senior team. They were ignored, so they were not happy with the sale. Lots of mullings on the beat yesterday saying that he would have to resign, and that's what's happened this morning. He's handed in his resignation.
Well, good to know that he listened to the shareholders, and Moonpig sales and profits doubled, and markets are eyeing U.S. consumer confidence. What else is happening in the business space?
Oh, yeah, Moonpig. This is a great British business news story. Moonpig, especially for our viewers in the UK, I won't sing the theme tune, but it's a very, very popular kind of card celebration firm. They announced that they would be listing on the London Stock Exchange, which they did in February. This is the first time we've had a trading update from them, and it's very positive. They've revealed that revenues have more than doubled from this time last year, where it was about £42 million, to this period, which has been over £90 million. Lots of people have been staying at home, catching up with friends, buying some of their pretty outlandish celebration cards, and money's been good for them. Unfortunately, though, for the bosses, their shares slid 5% in early morning trading, and that's because they said they are starting to see consumer habits return to pre-pandemic levels. Lots of businesses are starting to see that now people are starting to get back out, that their habits are changing, so they're not sure that they're going to be able to match these revenues when it comes to their next trading update in Q3. The FTSE is down actually at early trading, down below that 7,000 mark, and this is obviously because of the China crackdown on their domestic tech titans. But it's results season, so we are expecting more results to be filtering in. Tesla last night beat everyone's expectations on the New York Stock Exchange. Their shares were trading up by 2% after trading in the early hours.
All right. Thank you so much. I know you have an update for us later on today during Business Incorporated. So get prepared for that. Talk to you later.
I will. Thanks. Thanks, Cindy.
Yeah. So we move on to the crypto market now. Amazon has denied that they will accept crypto for payment. And of course, we have seen that reflecting in the price of Bitcoin, Laddie.
Yes, Ini, that's markets for you. You buy the rumor because Amazon never came out with a statement in the first place that they were going to accept payments in cryptocurrency, but the market already just took that rumor and went crazy, and the bulls ran with that, but the bears we're ready to sell that, and now we have the market in red. Bitcoin got as high as about
so much red, Laddie.
Yeah, got as high as about 40,000. Hit, but couldn't stay above that level. It's down now. Ethereum and major altcoins. We see the stable coins are in the green. It shows you that investors are trying to save their money from the fluctuations there. Market cap, $1.47 trillion, down 5.92%. It got as high as about 1.5 trillion, almost getting to 1.6 trillion yesterday. But we have volume of $108 billion, up by 11.37%. Bitcoin dominance, 47.58%. Let's bring in Solomon on Monday now to help us make sense of this. Hello, Solomon.
Yeah, good morning, Laddie. Good morning.
Good morning, Solomon. Well, it seems the Amazon news has pumped and dumped the market. What's going on?
Yeah, so it seems. It seems the market actually crashed because of the news, but that's not really what happened. So we could see here Bitcoin actually did spike based on the news, and we had so many persons buying in, but that was not what caused the dump. What actually caused the dump is very, very logical, and it's normal in trading. We actually hit a resistance point at between 40,000 and 41,000, and there you have so many sell orders. So what happens is once you hit that point, the sell orders get triggered and the price will just instantly retrace. So we found out that the price retraced and we hit our previous support, which is between 36,000 and 37,000. So we are still 100% bullish. It's looking pretty strong, and we'll make another attempt to try and break the resistance at $41,000.
All right, let's see if that support holds. But another big news, Binance and a Russian museum are looking at tokenizing art like Da Vinci, Van Gogh paintings, and masterpieces from Leonardo da Vinci. That's quite big news for the NFT, Binance's NFT space.
Yeah, it's a big news for the NFT space. It's a big news for artists, and it's also a big news for Binance and its token. So Binance has been making real big moves to bring more activity and bring great NFT projects down to their newly launched NFT market. And for them to have landed this deal to be able to tokenize Da Vinci's drawing, I mean, this is really, really significant. And plus, we've been seeing NFT market has been doing very well for the past 3 weeks. NFT tokens have been going higher and higher. So this only means one thing. It means that the Binance token is highly undervalued currently. And it also shows us the importance of NFTs in terms of tokenizing artworks. So long term, it becomes very, very easy to be able to know who has the actual verified and the true copy of that Da Vinci drawing based on the NFT.
Okay. All right, Solomon. Thank you so much.
Yeah, thank you.
All right, and if you're going to be shopping for, paintings, you might as well grab one of those, maybe for a few $1 million.
Okay, I'll think about that.
Yeah.
But one thing that Solomon said that caught my attention is that it's not the Amazon statement that has affected
They hit
the
resistance
price.
And had to come back down, I guess.
Okay, all right. He's the pro, so we'll hear him. All right, well, that's where I would say thank you so much for joining us on the show for this morning. Do remember that today is MPC Decision Day, so we have a special edition of Business Incorporated at 1:30. We'll be giving you a live airing of that decision, and we'll have, of course, commentary, as we'll have some analysts in the studio with us. So join us at 1:30 for that. I'm Ini John Mekwa.
And I'm Laddie Williams. Thank you for watching.